Welcome back to another video. Today we are going over ICT's classic buy and sell days. These are going to cover what the market profiles or algorithms actually look like, how to spot them and where to spot them, and ultimately how to differentiate and anticipate them from seek and destroy days or consolidation days, because ultimately that's what's going to help you build your daily bias and understand where price is likely to draw to before the New York session opens. Okay, so with all that being said, let's hop right into what a classic sell day algorithm or market profile actually looks like. And the first thing that I want you to note here is that we do actually have this accumulation structure right here, consolidation if you prefer, but I prefer the term accumulation because it is actually what's occurring here. And as you can see, we do actually sweep buy side liquidity right here. And this is actually what's commonly referred to as our Judas swing during the London session. So if this is our Asian session here, this gray box, we then have this London session manipulation here, and then that's followed up by our New York session, which is going to be our continuation model or structure down here. So this would be our A, our M, and our D. So our Asian session is our accumulation, London session is our manipulation or Judas swing, and then New York session is going to be our expansion or our distribution phase. So if you haven't taken a look at what my AMD video goes over and you're interested in it, make sure to check it out. I'll have it tagged in the top right corner here right now. So with that being said, the next thing that I do want to note is that lots of the time, this is the easiest to spot in terms of a sell day, but sometimes we do have deviations from the Asian range where we actually break down and then sweep the buy side before continuing further to the downside here. And if you've watched my seek and destroy video, you know that that's actually what we're looking for a seek and destroy market profile as well, where Asian low gets swept and Asian high gets swept, so you would be anticipating price to come back up here to sweep the London high. And if you thought that, you're absolutely correct, which is why it's really important to understand when they are likely to form. And with that being said, we're going to hop right into when and where to anticipate these expansion or classic sell and buy days or algorithms. So with that said, unlike the seek and destroy days, you are going to be looking for classic buy and sell days or expansion days, also called trend days, on days that are following accumulation or seek and destroy type days. You're also going to be looking for them on highly anticipated news days, specifically following the news release or drop. These are going to be more likely your expansion days. They might not follow the classic buy and sell market profile, but they are more likely to form trend days. And the last day you're going to be looking for these are during midweek. So specifically, you're looking for Tuesday, Wednesday, and sometimes Thursday. So now you can see that this midweek point also aligns with this accumulation or following a seek and destroy type day, as we do tend to see those accumulation days on Monday. So with that being said, let's take a look at these charts here and actually get into what you're looking at. Okay, so now that we're looking at price here, I have just removed a couple drawings I had on here earlier, have marked out the Asian range as well as Tuesday's price action. So anything inside these white lines is Tuesday's price action. As you can see, we do create this Asian range, sweep sell side liquidity, and then buy side liquidity, which does set us up for a seek and destroy day. However, we aren't expecting it because we don't have a big news release the next day, and it is a Tuesday following a seek and destroy type day. So we are expecting some expansion here. As we can see, we do sweep the high and manipulate up before continuing down. And something that I do want to note here that I actually used on this day was I was taking a look at the hourly chart and I noticed we did have this 1 hour breaker block here. Now, unfortunately, I did not take a trade off of that breaker block because at 10 o'clock, which is this candle right here, we had news, and unfortunately, we had tapped into the breaker beforehand and I wasn't trying to front run the news in case I was wrong. So with that being said here, we are going to note that we rejected this breaker and was sending down, and this is something that I like to look for on classic buy and sell days as well. Lots of the time you're looking for price to push back up and reject a higher time frame PD array before continuing down in the New York session. So hopping down here into the 5-minute, since we didn't get this entry, we are looking for other entries. So we could have taken this breaker block right here on the 5-minute if we wanted that, as well as this 5-minute fair value gap right here. So this 10 o'clock candle did create that fair value gap. Institutional order flow entry drill on this candle right here before pushing down towards sell side liquidity. I did not get involved in that either, and instead ended up waiting until price came down here in this consolidation range. I noted that we had this 5-minute fair value gap right here that had formed, and I didn't want to front run this because on the 1 minute here, I was looking at price here, and we were creating these equal highs here. So between this high and this high, we had these relative equal highs, which makes a nice little liquidity pool here. I actually took a little scalp from this low of this fair value gap here and just took 15 handles to the high here. So just a 1-to-1 scalp, nothing too crazy, but I was expecting lower prices, which is why I didn't hold for longer. Just wanted to get in the game here a little bit, and we ended up selling off. And this is when I actually took my entry. So after rejecting this 5-minute fair value gap, sweeping internal liquidity and shifting market structure to the downside on this candle right here, we did have this fair value gap here along with this 1-minute breaker block. And so I actually got involved at the breaker block here. So, and the fair value gap. So I entered here, had a 15 handle stop loss because that's pretty much what I do for all of my trades, and was targeting lower prices in the form of sell side liquidity. So I was looking for these relative equal lows down here and potentially this low here. So since I was bearish, everything was aligning for me. I was able to hop in this trade, and I actually held it for quite a while here and ended up getting out fully. So my last take profit was at 22.25 here. So just a little bit higher. And this was my final exit right here. So for about a 4.48 risk to reward. Of course, I had some partials on the way, as you can see in this photo, but essentially that's what I was looking for, and this is what allowed me to build this market profile, allowed me to build my daily bias in a bearish case, and allowed me to build extra confidence and confluence in taking this trade to the downside here. And the reason why I got out here, which is not at sell side liquidity on NQ, was because we did sweep sell side liquidity on ES, and we hit my weekly target on ES. So I wasn't really expecting there to be much follow through here, and I was quite happy with this trade and the gains that I got on this trade. So I was happy to close it out here. And as we can see, price does continue down lower throughout the day, but in the grand scheme of things, it wasn't a bad trade or a bad exit. So with that being said, now let's hop into a bullish case, and this actually happens on the following day. So we're looking at Tuesday here. Let's go ahead and look at Wednesday's trade or Wednesday's daily market profile, because we know that these are likely to form on Wednesdays as well. Okay, so now that we've taken a look at the classic sell day on Tuesday, let's dive into Wednesday's price action, because we had a classic buy day all the way up into this breaker block here. So with that being said, I have marked out the Asian range and the days range in between these white lines once again. So as you can see, we accumulate over Asian, then we push down during the London session, making our low of day at London, and then pushing up higher into market open at 9:30 right here on this big green candle. So the AM session was a little choppy here to start off, but quite volatile. And ultimately, what we're looking at here is our bias was definitely bullish. We didn't have this sweep above the high like we had the sweep of the low here first. So there's no bullish breaker block right here, but there is actually a bullish breaker block right here. And this is a 15-minute breaker that I'm marking out, but this is also actually a 1-minute breaker block here. So I'll just clear this up for you. You can see this up close candle is a 1-hour breaker block, as well as a 15-minute breaker block. Now this is no setup for me because I don't really like taking trades this early in the morning. Most of the time I'm actually asleep. So there wasn't anything of interest here for me at this time, but it is something worth noting because that should give you a little added confluence that we might be seeing higher prices later on in the day. So my trade actually took place here in the PM session. So with that being said, let's hop into the 5-minute time frame and take a look at where I was entering. Okay, so taking a look at the 5-minute time frame here, we can see that we kind of had this accumulation structure right here. Then we had this manipulation structure down here, and then ultimately this expansion to the upside. So some interim or intraday A, M, and D, or power of 3 on top of a power of 3 classic buy day. So we definitely had this bullish bias continuing into the PM session here off the lunch Judas swing. And once again, if you haven't seen that AMD video, I suggest going and checking it out. As we get this push up, I was actually looking for this 5-minute imbalance or fair value gap here to invert. So once we did break through this and come in a retap, I actually got QQQ calls here looking for higher prices, and that also allowed me to get into a futures long on this candle right here. So if you want to see the execution of this, I did actually have this recorded and it is posted to Twitter or X. So if you want to take a look at the live execution on that, you are more than likely or more than welcome to. It is posted on Twitter, like I said. Now, when it came to those QQQ calls, I actually exited at the top here. So I took this high to low and I actually exited my QQQ calls right here at the top of this -1 standard deviation from this manipulation leg. So this was where I exited for 100% on my QQQ calls. And as you can see, that AMD theory actually works out quite beautifully here. Once again, no surprise there. So with that being said, guys, I hope you found this insightful and that you're able to start utilizing this information to help you build your daily bias, as well as get on the correct side of the market and figure out when these expansion days are likely, and also allowing you to hold your trades a little bit longer when you are on side of this algorithmic price move, because it is really fun to get involved early. I got involved down here as well as here, so this was a nice little leg up. But had we been able to get involved further down here, or even in this breaker if there wasn't a news related event, then this could have been a really great day. And these are the type of days that you really want to get in early and then let it ride. And essentially you're looking to just take those low resistance liquidity runs in the opposite direction as well when you were heading into an NFP week here, which this was. So if you do have any questions, make sure to let me know in the comments section down below, and I will do my best to answer those. And until next time.